Hey, what up everybody? I'm pretty excited about this video because it's been a long time coming, wanting to make this one. Initially, QFL pulled all of his videos down, and I'm usually the supplemental videos talking about the things that he doesn't talk about in his videos, like hybrid trading strategies and stuff like that, but he pulled his videos down, so we made a video that I thought was pretty comprehensive. So what this video is going to be the biggest mistakes when trading QFL. And somebody actually in the Hodaloo Telegram was complaining that they had lost a bunch of money. And anybody that loses money in trading, my heart goes out to you, because I've definitely lost money in trading and it sucks. But I have had success with QFL. And, you know, just a disclaimer, like initially I did not like QFL. I tried all the other strategies and eventually just landed on QFL because it's the closest to what I understand in business as just buying wholesale. So we're going to talk about those mistakes, and I'm just going to jump right into it. So the first thing is buying too early, not waiting for a true panic drop. And the mistake is entering the trade as soon as price breaks the base. And by the way, you should watch that prior video because I'm not going to go over the terminology and stuff like that. So you're probably going to be missing a couple of screws when I go over these terminologies. So entering the trade as soon as price breaks the base instead of waiting for a full panic drop. So why it's wrong? A slow grind down does not trigger the same emotional response as a fast panic sell-off, reducing the probability of a strong bounce. So the correction would be wait for a steep nosedive drop before layering in buys. And let me show you what I mean by a grind. So in this case, this is just some random altcoin that I like. It's kind of whippy, but you can see in the 2 months we've had base crack, okay, and then here's like another one where it had a panic drop and then it kind of sat here, but really this should be the base. And then it cracked it and then it bounced back up. But then now here's the situation that they're talking about, is that right here, and while it did crack the base and then return to the base, this is like, that's not what you want. Obviously, right there, look at that, that's a panic drop. That's like dropping a pebble, from dropping a penny from the top of a building. And that's what you really want to see is that type of thing. You don't want to see kind of like somebody throwing a paper airplane off of a building. And that's the case with this. You want it to be a nice, beautiful drop. So number 2 is not using layered buying. So going all in too soon. So the mistake is buying everything at one price instead of scaling in incrementally. So why it's wrong: if price continues dropping, an all-in approach wipes out account flexibility and increases risk. So the correction is use exponential layering, which I talk about in like all my videos, buying small, medium, large, extra large, extra large. And I actually have a special treat for you right here regarding that. Now, I've talked about this before, but this is the QFT Bottom Feeder indicator. And so let's pull that up really fast. So indicators, you just type in QFT. There it is, QFT Crypto Bottom Feeder. You click on that. Let me show you my settings for that. It's super fire the way that I have it currently set up right now with these like green. My base sensitivity is 30, line thickness 1, average base crack is 55. That's just me personally. You can adjust that to whatever you want. And then, I've got yellow for the base extension and dots. Same with the base. First layer, I've actually taken out. The second layer, it's an area at 10% for green. I like, I had to click this plus button to get that type of green that I wanted because they used to have it and then they went pastel with their colors. Weird. And I just chose area, but here's something I forgot that I did. So it's 10% on all of these, and since it's translucent, it becomes more and more green towards the bottom. But then for the 5th layer, that's actually the background color of my chart. So when you take it off, it kind of has this ugliness to it. So I think that's pretty sleek looking. And again, that's just the color of my chart in the background that I've selected, and that's also area. And so you can see, and it also says buy, buy, buy. Let's hide the drawings really fast. Can I hide the drawings? Okay. Yeah, you can kind of see. Oops, that's not good. Let's hide the drawings. Nope, just the drawings. There we go. You can see it's like bye, bye, bye. But you can see that in this case, what you'd want to do is you want to have like all your biggest size, whatever. You want to have your biggest size down here, okay? And right here, you'd want to have less of your size and less of your size and then less of your size. So even up here, like I'm not interested in buying up here. Just, me personally, like I'm just not. I'm sorry. And the reason being is because I've seen price action just annihilate like 55%, and people in the forums are always like, oh, that never happens. And that's true, that never happens. But you know what? It does happen. And I describe crypto as like that crazy girlfriend where you're like, she's not crazy anymore. She's got it under wraps. It's like in the back of your mind, she's crazy. Like it's only a matter of time before she acts that way again. And so that's how I would think of Bitcoin and all of these crypto drops is like, it's not if it happens, it's when it happens. And so yes, it will ideally go down 55% from top to bottom, but I have seen it go from the base, straight panic dive down 55%. But 35, 25, like that's more realistic. And the number breakdowns from QFL himself, he's said, like this is just one example of layering, but $10, $35, $150, $1,000. Now, again, this is all covered in that last video, and I did a really good job, so I'm not going to repeat myself, but you can see the difference between, and even if we were to drop a zero off, you're like, I don't have a $10,000 account. Okay, well, $1, $1, $3, $15, $100. You're like, wait, I'm putting $1 right here and $100 right there. Wait, where's my drawings going? Let's just... Okay, that's weird. Whatever. But my point is that why would you put $1 right here when you're going to put 100 right there? It's not even worth putting any money right there. Boom, there's your problem. That's the problem. Now there's hybrid trading strategies that I love, but that's the problem right there is you're putting too much too soon, and that's what this is talking about. So let's go to number 3, ignoring past price action and not measuring historical drops. So the mistake is entering a trade without checking how deep price has historically dropped after breaking a base. So why it's wrong. Each coin or asset has different volatility patterns, and failing to measure past price movements lowers your odds. That's fair. Correction. Before entering, check the last 2 months of price action and measure typical drops. So and it says 35 to 55% off previous highs. What I say is with a base, let me take this bottom feeder plugin off. It's a great plugin, by the way. But generally speaking, from a base, it'll drop down about 35%. But from top to bottom, generally speaking, it'll go 55%. And you could even argue like, okay, from this drop right here, it went down 55%, but I'm just saying like in terms of measuring stuff, I mean, you could measure down from like right here, 55%, which I would. Like I genuinely think of price getting back down to this level. And I wouldn't doubt it. Like if you look on the weekly, like it has gone down that low before, so it can go back down there again at 2 cents. Right? It can go back down to 2 cents. And I've seen it do it before. So I know how it acts, and that's how I'm going to prepare for it. So selling too much too soon and not letting the trade play out. So the mistake is selling everything as soon as the price moves back up a little instead of scaling out gradually. So why it's wrong. Many traders panic and take small profits too early, missing larger gains when price returns to the base. So the correction is sell in portions, 25 to 30% of your position at a time, and keep some of the profits in the coin for potential larger rebounds. Yes, keep some of the profits in the coin. man, that you can't talk me out of that. Like, this is the whole point of why I'm trading QFL, is to make free coins out of my portfolio. And when it says 20 to 35%, what they're saying is when you buy in the way that, right, if you were to buy, here's the base, and you were to buy $1, let's just go buy $1, right? $1, $3, 15, and 100. Well, if you hit down here, then all of this together, right, is going to be under, obviously, $200, right? And so you would take about 30% of, let's just say you had like, 30% would be like, let's just say you sell $30. So like you could sell $30 right here, you could sell $30 right here. And then you could sell, $30 right here, and then leave the rest of that in profits. And again, I'm just roughly doing this. Like, ideally you'd have like some type of a spreadsheet, or you'd have like some type of mathematical equation to help you out with this, to where you're always getting your money back out and you're playing with the house money. But that would be the idea. And also, just side note, to just give a discount, like the way that I see this is a business. And so when I buy right here, I'm buying at wholesale, and when I'm selling at retail. But I'm also like giving a discount to the people that I'm selling to. So even though the base would be right here, I would give a discount. Trading slow grinds instead of panic drops. Mistake is buying during a slow downtrend instead of a sharp emotional panic. So why that's wrong. Slow grinds equals low probability of a strong bounce, and a steep drop creates emotionally driven bounces, right? So let's take a look at what we have here in terms of what it's talking about. So a steep drop, look at that. That's a steep drop. And then it creates emotionally driven bounces. Look at that. And if you were to measure that bounce is insane. I think it's like 30%, which is about as good of a bounce as you could expect in terms of just like green bars back to back, like 30%. That's amazing. So that is why you wouldn't want to trade these slow grinds, because there's no emotion in these grinds. Nobody's freaking out. But when you see that happen, man, people are freaking out, because if somebody put in realistically $10,000, that $10,000 would be worth $5,000, and they're like, whoa, this could keep going to where I have like 1,000, and that's irrational. But when you are losing that much money that fast, you get some crazy thoughts going on in your head, and which is why I love QFL, because I know that somebody else is thinking that when this panic drop is happening, and it definitely helps when you need to have those balls of steel to put in like your largest size right here. Because like side note, I think most people when they trade QFL, like they have like a $10,000 account, and then they just like buy $5,000 like right here, and they're like, yeah, I'm so smart. And then they just start buying like 1,000, and then like 1,000, and then like they put in like 100. I've done this before, like, so I'm speaking from my own experience. Like in the beginning, I'm like, oh, I bought, it's never gonna go down any further than that, and then just keeps going, and I'm like, I better keep buying, and then I just like throw like smaller amounts. It's like, nah, you should have planned out for that, buddy. So hopefully a lot of this is making sense right now. Okay, this is actually definitely a big one, is trading Bitcoin pairs and ignoring the arbitrage effects. So the mistake is using QFL on Bitcoin pairs instead of USD pairs. And so why this is wrong is Bitcoin's price movement distorts the chart patterns and makes bases unreliable. So what looks like a panic drop could just be Bitcoin rising in value. This is so true. So the correction would be, it says trade against USD pairs, not Bitcoin pairs. But what I would say is if you're trading, like an altcoin versus Bitcoin, then I would also have the altcoin versus the dollar on a separate chart. And I would use the altcoin versus the dollar chart as the de facto QFL chart. And then the Bitcoin chart, I would be trading on that, but I would still have my math going based off of the USD chart. That's like kind of low key a big deal, especially like that happened to me when I was trading Bitcoin pairs in 2019 and Ethereum pairs. I was like, why is QFL not working? And then I read the arbitrage effect and also the the Bitcoins and the Ethereums taking off really like waters down the QFL effect. So not adjusting your buy orders when the market conditions change. So the mistake is keeping buy orders too close to the base, even when price is showing grind-like behavior instead of a panic. Why it's wrong. If price grinds down, the odds of a strong bounce decreases. So holding your buy orders higher up means getting stuck in a weaker bounce. So the correction would be, if price grinds down slowly, pull your orders lower for deeper discounts. And this actually happened to me with this coin, and you can even see like right here. So it's coming down like this, and somebody might draw the base like right here. Okay, so somebody might have their layers like all like this, and then it ends up, maybe let's take off one just to like, show somebody doing it really wrong. And then, so they've already bought in maybe one or possibly even two layers, and then it kind of went back up here. I mean, I guess you could sell back at the base right there, and that's what you should do if you're doing that, but I don't even care about any of that. It's, the problem is right here, and this is where I'm actually dealing with this right now, is like not all trades are perfect. And so sometimes it'll hit your layer right here, but for me, my layer was like up here, and then I've got some layers. So it's like kind of going down in between two layers, like it stops right here. And ideally you want to have it hit your layer like right on the nose. So when you come back up, you're getting maximum profits. But in this case, it didn't do that. And so I had a sell layer like right here, and then I had a sell layer which did not get hit, and it's small. It's a small amount. But the problem is that now I've got a ton of size sitting right here, and now the size should be sitting in the 20s, or maybe even like 25 is where the real size should be. Because now what is going to happen is if it comes down, it could just keep plowing through, and then it could just come back up, and now this is the new base. Or maybe not that being the new base, but this may be the new base. And so I'm risking, if it comes down and hits this, that I'm not going to be getting as many profits. And this is like a little bit more advanced in terms of, managing your risk. But that really is a big deal. So number 8 is hoping for a rebound instead of expecting further drops. So the mistake is saying, I hope it bounces after entering a position. And so why it's wrong is hope is not a strategy. That's so funny. If you put too much money in too early, you're trapped hoping price recovers. So the correction would be enter with the mindset of please go lower, which is QFL's favorite phrase. So small initial buys allow for more aggressive purchases later at better discounts. So true. That small initial buys allow for more aggressive purchases later at better discounts. Like, what a phrase. That's it. I'm not even gonna say anything else aside from that. Like, you can just marinate on that. Number 9, using the wrong position sizing, so not accounting for portfolio size. This is a terrible problem. So the mistake is using position sizes that are too large relative to your account size. That's bad. So why it's wrong. If a trader miscalculates layers, they could run out of funds before price reaches the bottom. So the correction is adjust layer sizes based on account size. So yeah, if you had it, I did cover this in the last video. It's like so crystal clear in that video. So please watch that video. If your account is like a $10,000 portfolio, then you're going to trade probably like 4 coins, right? If not 8 coins or 10 coins or whatever. But let's just say you're trading 4. So you're going to have like 2,500, 2,500, 2,500, and 2,500, right? That's your account, $10,000. And then from there, you take 2,500 and you spread it out. So like in this case, let's say you were going to trade this, then you'd only have like, let's say 1, 2, let's see how many of these, 1, 2, 3, 4, 5. Let's just have 5 layers. So 3, 4, and 5. And maybe somebody might be like, that's too far down. Like, what? This is insane. Okay, fair. But I've seen this altcoin I've seen altcoins do some crazy things. So let's just say this. How about like right there, 2, 3, 4, and then 5. How about that? We'll move this down a little bit just as an example. So if you were to have 2,500, then your largest size would be right here. And then your largest size would be right there. And then a very significant smaller size would be right here. And like your nibble buys would be like right there, like teeny tiny, like 1/100th of what you're going to put right there. Okay. Or 1/50th of what you're going to put right there. So whatever your largest layer is, I don't have a calculator right now, but you could understand that like how you're going to scale it. Like in the case of, having like $10, $10, 35, 150, and 1,000. It's very clear that probably most people are putting in like huge size like way up here instead of down here, and so you're not saying like please go lower. You're saying I hope it returns to the base, like, and I'm sure if you're looking at it, you're like, I'm never going to make any money. This is dumb. Like, you're not going to trade strategy. QFL is not for you because, like, yes, it does go down. Like, it went down 35%. Like, if I were to measure this right now, like, 35% might be, like, right there. And so, okay, you know what? Just use that as your thing. But I would move that down to, like, right there. And now you're down at, like, this fourth layer. You see what I'm saying? So, like, this would really be more like that. And so... and now you can see like this whole like 56 thing, like hopefully this is all making sense, that I have these numbers because I'm basing them off of what I've experienced over the years of trading with QFL. And this is like the maximum, that crypto usually goes. I mean, it can go outside of this and it's not rare. It's just, it doesn't happen all the time and forever. There's a lot of crypto coins. So you have to understand that. Number 10, misunderstanding the safe circle. So predicting instead of measuring. And I'll tell you what the safe circle is, which has been covered in that prior video. Mistake is thinking the safe circle guarantees a reversal. Why it's wrong. Safe circles are guidelines, not guarantees. Traders must still assess market context and panic strength. So the correction is use a safe circle as a probability range, not a fixed rule. Position your buys toward the lower part of the safe circle for best risk and reward. So the QFL strategy is to go back 2 months in time of price action. So in this case, let's do this. We'll do a date and price range. So we're pretty much in March, right? So this is 2 months of price action right here. And so the idea is that you want to take these measuring tools, and I am going to, so these little drops right here, are generally going to be like 10 to 20%, like maybe 25%. In fact, a lot of these are 25%. Obviously, in this case, it was like 35%. But these drops are generally like, I've already measured them, so they're going to be like upwards 20, 25%. So when it does go down 20, let's say in this case it was 20%. So this would be where you would start to buy, is like right here. You see what I'm saying? And then outside of that range, that would be where you'd be getting your size in. And so you just start to nibble towards the bottom of the circle. And then as it goes down further, like hopefully this is a big aha moment. So the final thoughts on this is that QFL strategy is about playing the odds, which, has been said that it's up to 98% when followed correctly. 98% odds, it really is, like, I would stand behind that 98%, in terms of, drawing a base and having it respect the base and go back and price will return to that previous, support level. With a panic drop, and a bounce, indicating that this is a base. So it's not about trying to predict exact price movements. That's like super valuable. Avoiding all those mistakes will help you execute high probability trades and avoid unnecessary losses. That's just words of wisdom. And by the way, this was created through ChatGPT. I asked if it knew who QFL or what QFL was, and it actually did. So if you have ChatGPT, you can use ChatGPT as a trading coach talking about QFL. But I fed it my transcript of my QFL video, and I said, let's come up with biggest mistakes when trading QFL. Use my chat transcript. So this is what it came up with. But hopefully this helps, and hopefully will help save people some money. All right, bye.